a sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, is Julian, and I'm very glad to have you in, if there is somebody in. Guys, today is a good day because we will back the earnings results of Q1 2025. Gambling.com, a business or company which is active globally in the iGaming and in the betting industry, providing their different services basically for sports bet vendors and iGaming vendors like digital casinos. But before we jump in, because the results are already live, just a quick disclaimer: in the upcoming minutes, no financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. Guys, it's your own money, make your own decisions, do your own research. Yes, because at the end you need to live with your destiny. And guys, you can see, hopefully you can see, not yet, but now I assume. And back to it. Yeah, looks good. You can see here the investor relations website of gambling.com, actually, I couldn't see the release of the financial reports, at least till now here, and the reports, fillings and financial section. But when you check out the news section, you will find the news, and then you know, okay, results are live, and so far, at least on the first glance, it looks good. Guys, as always, as I keep it, I copied already out the information and put it in my data sheet, which you can see right here. And again, guys, make sure, I'm copy and pasting them, or sometimes putting it manually in, so there can be some mistakes based on my my procedure, how I interact with this document. So always make sure to double check the numbers, even though I assume most of them should be correct, or actually all of them, but you never know. So guys, here it is, and we have bottom line growth, we have top line growth, starting with bottom line earnings per share. And guys, forecast or outlook was more forecast by the analyst was 0.24 US dollars, and I wanted to see something, what you can see here, like 0.3 US dollars, so 30 US dollar cents. Why? Because last year, compared Q1 2024 to Q4 2023, they received or achieved a beat of 6 US dollar cents, as you can see here, the difference. And I wanted to see as well that they cover this kind of beat of expectations with 6 US dollar cents, which is overall 30 US dollar cents. But the adjusted net income actually is quite good, quite sick, if I'm not mistaken, and therefore they provided a huge beat of almost 100%. Crazy. You can see year-over-year growth of 128%, adjusted earnings per share, and strong one, if I'm not mistaken, by far the strongest quarter in the history of gambling.com. Yes, you should not forget they acquired a company which is called OddsJam, which is a provider of different kind of betting services, and so there is this kind of jump because it's in line with kind of expectations. But again, expectations considered, I assume at least as well, have been considered already in the 24 US dollar cents, and now achieving this huge beat shows that the acquisition already creates momentum and hits in very well, and that's nice to see, because gambling.com, as you know, a lot of companies, at least when I invest, I prefer organic growth, so in-house growth, developing own solutions, product, services, and expand the business to new regions, for instance. But gambling.com, this business is kind of defined as well about acquiring other businesses, acquire competitors or new businesses like OddsJam to achieve higher diversification and basically security for the outcome of gambling.com, and therefore there is this kind of jumps taking place sometimes. We will come later to this topic more often for sure. However, earnings per share, without any doubt, a very, very, very strong positive and green rating. I mean, it seems for me like gambling.com is a true cash machine. That's my impression so far. Even though I'm as well an investor of it roughly half a year, so I need to experience more and more as well what this kind of business is about and grow together with the business. So let's check out what is going with the revenue, and here guys, it's not that compelling, but on the other hand not as well strongly disappointing. You can see forecast of the analysts was 40.38 million US dollars revenue, and I wanted to see 14.89. Why? Basically again the same beat level of roughly $500,000 US dollars like 1 year ago, as I'm marking here, and this is what they don't achieve. I mean, they achieved the beat, but a very, very tiny one by just 250,000 US dollars, not strong, and my beat expectations of roughly 4.9 million US dollars was already not set up that high. So honestly, even though it's not really heavily negative, I rate it negative, because it is negative for me. I need to be strict here. However, overall, in combination, I would love, I mean, some companies, most of the companies I'm invested because of revenue growth. In terms of gambling.com, it's a bit different. It's a blend out of profit and revenue growth. I mean, I always appreciate more revenue growth. That's my perspective on the business, or of my style of investment. But in this case, it's a bit more 50-50 balance. So far, we're talking about a neutral rating from my perspective. And now, as always, we dig a bit deeper into the details of this business. I've added additional categories. And so you can see always here different perspectives on the revenue, different categories, how you can separate and structure different buckets, and put it in different buckets basically, the revenue acquired or achieved by gambling.com. And I always put below the percentage of the revenue of this bucket, so you have better insights, because sometimes number is difficult to get a good feeling for it, but I think percentages, so shares basically, is quite transparent. And let's start with this perspective, with those buckets, and this is basically how they separate it in major different income sources. I mean, they have the performance marketing, that's the legacy business of gambling.com, and you can wait, I can quickly share it. There are pages existing, providers like their mother page, the flagship page, gambling.com, free bets, casinos.com, bonus finder, and RotoWire, and all of these pages. Basically, you can, if you Google for best offer, best bonus, best conditions to play this kind of casino or whatsoever, then you have this kind of comparison site here, a bit like bookings.com if you want to state it like this, or like all of this kind of classic comparison websites. There are many out there, as you know. This is the core business, and this is standing behind the wording performance marketing. And then there's subscription business, and subscription business was already existing in the past, as you can see here, but really the newest investment, and that's the reason why this big jump took place. The newest investment was in OddsJam, this additional, I can share here as well, the website, here it is. You can screen it a bit by yourself in detail if you like, but this is the company they acquired. I'm not sure, I need to check it out one more time, but I think it was something like 120 million US dollars, so the largest acquisition by far from gambling.com on actually something outside of the regular legacy business scope. Why? Because again of diversification. Yeah, I mean, as soon as, for instance, companies like search engine providers, Google or Alphabet, as soon as they somehow create regulations or even states, countries, you know, like governments, they establish regulations and, let's say, performance marketing stuff, so this comparison websites, to transfer potential customers to the later on vendors of the betting and iGambling services. If that is not allowed anymore, it's banned somehow, would have a huge impact on the business of gambling.com, and so they make now sure to dig a bit deeper, still set the focus on gambling and betting, what I highly appreciate, because the overall management, everything is addressed in this direction, basically, and directed in this direction, and perfectly set up, but if you ask me, very experienced team. But yes, of course, even there in this business, you can have multiple business cases, and so they are diversify the different sources of revenue, basically. And OddsJam was the big hit which took place in past December, and which is since the beginning of this year completely acquired and basically adding value to gambling.com's business. Yeah? So that is again what is primarily meant with subscription, at least the big jump is related to it. And then we have advertising, and you can I think it's self-explanatory. So they have this different kind of comparison websites, and for those, for instance, they can offer to use it as a platform for advertisement. So guys, let's see what is going on here. And as always, we compare year-on-year growth this quarter to year-on-year growth past quarter. So as you can see here, Q4 2024 means this 5.2% means Q4 2024 compared to Q4 2023. And in this case, Q1 2025 year-on-year growth means Q1 2025 gets compared to Q1 2024. As simple as that. And you can see the legacy business past quarter, they grow by 5%. Not that crazy strong, honestly. Even though there is kind of sometimes the seasonality existing, and acquisitions make a huge difference because you can imagine if they purchase RotoWire or free bets or whatsoever from one quarter to another, it's not about organic growth. The revenue developed heavily just because of this acquisition. But because of, in this case, in this quarter compared to last quarter, only OddsJam was new acquired, as far as I know at least. And as far as I know, OddsJam is not performance marketing. It's not this legacy business. It's subscription business. So it seems like it's kind of organic growth, and that looks amazing. Yeah, that's really, really strong, this raise and reacceleration. And so therefore, definitely positive rating. And I love this because that's still the by far most important bucket, yeah, in terms of revenue. And so yeah, nice to see it's developing great. And now here we have this OddsJam business primarily, and a few other subscription sources. And I mean, that is really difficult to evaluate, because you can see here, or to assess, because you can see here last quarter 39% year-on-year growth, which is already okay, organic growth very likely. Now more than 400%. Yes, again, they acquired OddsJam, and obviously roughly 8 million of it is OddsJam, yeah, income. Yeah? And they already stated, I think, 20% of the overall revenue, and total revenue will be, it's expected 172 million. Oh, let's check out. So it's expected that roughly 34 million will get added by OddsJam. That is what was stated by the management, because they told, okay, outlook for this year is 172 million revenue, and roughly 20% or even more than 20% will be covered by OddsJam. So they purchased basically with this acquisition 20% revenue. It's crazy. And of course a lot of profit, at least hopefully. Yeah, but look guys, I mean, how you want to add here a rating to it. I personally like that they mentioned in December, okay, we acquired it, and 1st January it was done. Everything was working well, and now it already making moves basically as well. If you check out the quotes by the management in the news article, so it looks quite impressive. And that's not always the case when companies acquire other companies. A lot of times it's difficult, it's challenging, but again, that is it's really one of the strengths and skills of gambling.com, because again they are used to acquire new companies, onboard external stuff basically, and processes, and saving money for general administrative aspects, marketing, all this kind of stuff. So create this kind of network effects and synergies, and I think they're doing it well. The results look incredible, and so therefore I can't wait that they cross through the $10 million per quarter revenue mark. Now we check out what is going on with advertisement revenue, and here we come from a quite high growth of 34%, as you can see, and now talking about 29%, so 5% down. Again, down is down, that is not good. We want to see it staying stable or even is increasing, but again, I mean, we need to consider that on a relative scale it can't always grow that strongly, and maybe we check out a bit the absolute scale, and you can see advertisement compared to past quarter 300,000 more, then it was stable, then it was 400,000 more, then it was actually 500,000 more, 300,000, 400,000, 300,000. So 300,000 is actually not outstanding, not on an absolute scale. On a relative scale with 29% looks better, but again keep in mind 34% was the year-on-year growth the quarter before. So it's a difficult one. I would say I rate it I think on a solid base. Yeah, I would love that it's dropping less, but even though it is dropping, it develops still in the right direction, and 29% growth is okay, it's good, I think. Yeah, so when we talk about those buckets, very, very solid, at least at the end, very positive actually. And then let's check out what is going on. I mean, I already mentioned they have different kind of types of customers, and let's say real events they're covering. So casino, sports, and others. And others is poker and bingo basically. Okay, and we can see here what is going on with the casino business, and we need to consider that is iGaming basically. And that is, as far as I know, very, very profitable business. Way more profitable than sports betting. Even though sports betting is growing quite strongly. And yeah, it's a bit unfortunate, but the most important is, I mean, that is, at least it's not dropping heavily or whatsoever. Yeah? You can see here the ratio. And I think Missouri will be a new state in the US, for instance, in which sports betting will get allowed during 2025, this business year. And you can see, however, past quarter they grew by 43% and now 24%. And honestly, guys, that is not something which is convincing me. You can see it's casino revenues even lower than the quarter before. And even lower than the quarter before. Way better than 2024 and 2023 results, but still, no, that's not what I like to see. So negative rating and color it red. Let's check out what is going with sports. And I mean, again, we need to consider somehow this 8 million revenue, I assume, of the OddsJam, because OddsJam business is betting business, and betting business is sports. So you can see past quarter minus 39%, now up 68%. Yes, up because very likely of the OddsJam acquisition. Otherwise, I can't explain this big jump. But guys, doesn't look for me too compelling, because I mean, if I take more or less clean this roughly 8 million revenue of OddsJam, roughly 8 million, maybe it's a bit more, but maybe it's a bit less, very likely a bit less, then, and deduct it from this one, then it's definitely, let's say, even if it's only 7 million, then it's 8 million left, which was before existing, and that's lower than Q4. So not sure what is going on here, but doesn't look great from my perspective. And let's see what is going on with the bingo and poker business. Maybe, I mean, look, it grew last quarter 20 or let's say 30%, and again 30% for other companies. It's high growth. It is high growth. Yes, if you are from the total perspective, from the absolute scale, it's not that much. It's in the 100K or in the six-figure level, but it's still high growth, yeah. And somehow it recovered very, very well, but that is more because Q1 2024, you can see it here, was so bad, and I'm not sure why. If that's seasonality as well, somehow, I have no clue. Look, it's very, very volatile, very, very volatile, this results. Again, here you can see it. And so, even though the growth is impressive when we take a look with this 152% year on year, honestly, for me, it looks on the absolute scale not that crazy, even though it's the best year so far. But let's say, considering of this kind of volatility, and I have the feeling I have no clue what is behind it, why it's so eruptional and so volatile from one quarter to another, and it's still an all-time high, and it's still year-on-year growth of 152%. I give it a neutral rating, but I would love to see a better performance compared to past quarter. Yeah, that's the reason why it's not positive, basically. And let's now see where the revenue was sourced. You can see North America, UK and Ireland, other Europe, and rest of the world. So again, as I mentioned, they are quite a global player. And North America, you can see it here, struggled very well in the past. Again, not sure 100% why, but what you need to consider is, again here, free bets very likely will be very strongly in this, very, very strongly. And so, yes, I mean, we can check again one more time, year-on-year growth development. Last quarter, minus 24%, this quarter, 42% plus up. So, however, again, the acquisition will be very, very strongly in it. And so therefore I put it neutral, yeah, to not do any mistake. And I think that's fair, even though the jump looks crazy and high, but again, it's very likely purchase revenue. And I think next quarter compared to this quarter, if there's not a new acquisition, everything will get settled a bit, the dust gets settled, and we can see a little bit more clearly what is the organic growth, yeah. Okay, and then we have UK and Ireland. It seems like UK and Ireland is organic growth, and here as well, I mean, we had past quarter 41% year-on-year growth, this quarter 24% year-on-year growth. And I mean, with this approach, it is kind of, with my regular year-on-year growth approach, it's kind of difficult to make some statements about those numbers, because a lot of times they acquire new stuff, and therefore this kind of jumps taking place, yeah. And I mean, you can see that it doesn't need to have this took place this quarter or last quarter. So let's say 2025, 24. It can even be have a fundament in the year ago, because, for instance, who knows? Look, it dropped for in Ireland, UK by 1.5 million from one quarter. then it jumped again with 700,000, then had a huge jump, honestly, guys. Grow, solid, grow, and tiny grow. And who knows if one of their acquisitions, which I could imagine, I need to check the acquisition history, but I can imagine that they purchased somehow in Q3 something, and then in Q4 2023 it became active to add value to the business of gambling.com, and therefore, and maybe even one more time in Q4, and added value to Q1 that they acquired something else, because that would make sense with this huge jumps basically, and would explain it. And yes, it's an all-time high, but again, I mean, we need to consider year-on-year growth. And again, it's for me difficult to catch what is standing behind in terms of acquisition, so it's a bit tricky and challenging to screen this. But 24% itself is not bad, but consider again 41% of past quarter, so that's definitely another story. And therefore, yeah, I think I rated it as well neutral. Let's see what is going on with Europe. And Europe has a bit more clear picture, because again, past quarter, I mean, it looks great, 106% growth. This quarter, 54% growth. So it's dropping very heavily. And the difference here is, I mean, in UK and Ireland, on an absolute scale, it was an all-time high this quarter, so Q1 2025. But in Europe, you can see past quarter and the quarter before was higher. And so other Europe, guys, I rated for sure negative. And now let's see what is going on with the more exotic markets. Here stated as rest of the world. And again here, a little bit unfortunate, past quarter 92% year-on-year growth. This quarter 63% year-on-year growth. As well, a quite strong drop. And again, lower than the past quarters on the absolute scale. So I rate this as well negative. So actually you can see it's but this is such as life, let's say like this. If you screen all those kind of buckets, you get a little bit more insights what is standing behind the revenue and getting a feeling for it, how it's in general working, where they're active, in which kind of businesses and industries they're active, and what kind of service they're offering. And yeah, all of this is shifting very heavily a lot of times because again of this acquisitions. But look, it's lovely to see, just compare Q4 2024 to Q1 2025 in terms of the services. And you can see that performance marketing share really basically was transferred to subscription and diversification is taking place. And that is nice to see, because now they're not only relying anymore that heavily on performance marketing with 80%, but only 63%, and that's a great difference. Yeah? When you consider you have different stocks in your portfolio, and you invested in one company 80% or 63%, if this company jumps at one day to another 5%, it makes a huge difference if you have a share of 80% or 63%. Yeah, so that's lovely to see that diversification is taking place. Even though if they would set 100% of focus on performance marketing, on their old school, old-fashioned comparison business, I would be fine as well with it, because that's the major reason why I invested. Now let's see the real currency for this business, and these are the NDC, the new depositing customers. And again here, yeah, I mean, that should actually not be, that should only be performance marketing. I mean, correct me if I'm wrong, if you have other information, but this number should be only affected by performance marketing, so the newest acquisition of OddsJam should not have any impact. When you can see past quarter, it was year-on-year minus 9%, and now 29% up. And even though it's a bit lower than the past quarter, still lovely to see. That's the second, oh, it's not the second, it was already higher in Q4. So it seems Q4 has strong seasonality. Why? Very likely cold season, winter season. A lot of people are at home. Even Christmas stuff and this kind of money maybe flows into sports betting and gaming. I can assume that might be an impact factor for sure, and even maybe based on the sport events might be as well an impact factor. However, so seasonality is definitely an aspect here. In general, seasonality is an aspect what we need to consider. But this looks for me great. Again, 29% year-on-year growth. And again, I assume not that, if I'm not mistaken, I assume OddsJam is not a business of it, because that is again the old-fashioned business. So I rated positive. Now we come to the gross profit margin, and I mean gross profit is ridiculous at this company. Of course there are other costs, but gross profit, I mean they use it a lot of times and push it in front, and yeah, but again, consider addressing accurately the costs to the different services, and this is what you're doing with gross profit calculation. It has limited purpose and reason for existence in this regard, but it's as well nice to see what they are working with, and it's at least an indication. You can see last quarter year on year 9.5%, or let's say 10%, and now 2% up year on year growth. Doesn't look that crazy, but again, consider please how high they are, and I mean there is a certain ceiling existing, and now they're running more or less on this 90 or up 90 level, 90% level, which is enormous from my perspective. And so even though it's not really higher than past quarter, I'm happy that they can keep this momentum, and so I rate it at neutral, even though I could rate it actually even positive, because again the level is so high. Now we take a look at the operating expenses. So we're starting with general and administration, and here of course we want to see it is as low as possible as percentage of the revenue, and you can see past year on year it grew by 4.2%. Not nice to see. I mean, best case you want to see it stay stable or even decrease. And with 0.2%, let's say 0%, it is more or less stable compared to 1 year ago, and that is nice to see. And I assume it even gets lower. I mean, again, if you acquire a company like OddsJam or other acquisitions, it takes time to really implement them into your business and making sure, okay, I don't need all the stuff, I don't need all this marketing costs and this and that and server costs, hosting, whatever, clouds and cybersecurity and whatsoever, all of this, there are the synergies existing. And so I assume it will get lower. So far, it's not dropping that heavily. It's on a stable business, so I rate it least compared year on year. Therefore, I rate it neutral. But I expect that next quarter it will get down, and then I would rate it very likely positive. Here we have sales and marketing, and quite high costs, as you can imagine, and especially, marketing. And the development doesn't look that great. Past quarter, 1% year-on-year growth up, and again we want to see it stable or going down. And now 10% year-on-year. So not that compelling, not that convincing. 43%. It seems like I can assume OddsJam is a very marketing-intense business. I think, and that will be the major reason. However, considering this, I need to rate it negative. And we have research and development costs, or I think they call it technical or technological costs and expenses. And here it grew last quarter year on year by roughly 2%, now by 4%. So again, working into the right, into the wrong direction. You can see it's basically 15% for sure, an all-time high, and that's for sure straight net negative. But again, I assume as well, OddsJam is very research and development heavy, and it will affect it strongly. So there is a reason behind it. It's not out of nowhere. However, something what we need to consider, and what I don't like to see, and I hope it will drop in the future more. And I mean, overall, to put it in a nutshell here, operating expenses share of revenue grew heavily. I mean, past quarter already by 7%, now by 14%. So taking a look at the expenses side, not nice at all. Again, I think OddsJam has a huge impact on it. Otherwise, I can't explain those increase of the costs, but not nice what we want to see. Okay, now we check out what is going on with adjusted EBITDA, and I mean, that's as well amazing. I mean, look, almost 60 million US dollars with 41 million revenue. Looks crazy if you ask me. And so of course we're talking as well about a high adjusted EBITDA margin. Last quarter it grew by 9%, now only by 4%, but again very, very strong. And when you check out the history, the second largest in the history. So I don't see big issue with it. Again, it's an adjusted EBITDA all-time high as well. That looks actually a little bit small for me when you compare that. I think overall in total the outlook is 14.5 million added adjusted EBITDA by OddsJam. And now if we consider that the difference is more or less OddsJam, it's only 1 million. Yeah. But this will not be the case. I assume OddsJam added more than 1 million adjusted EBITDA in the past quarter to the business. So I think legacy business is dropping somehow a bit. That's not nice to see. But again, on the other hand, it really seems like Q1 from the season, Q4 from the seasonality perspective is very strong. You can see it here as well. 1 year ago, best quarter was Q4 2023, and then it actually dropped. Yeah, not that heavily, but it dropped. And so yeah, difficult to evaluate again. Gambling.com is really challenging, but it makes it interesting from my perspective, and really digs high chances, because if you just check the KPIs, if you just check the developments with a market screener, with a stock screener tool, then you can't see behind the curtains, you know. And maybe on the first glance you will think, oh, it's amazing, or maybe on the first glance you would think, oh, it's completely a mess and bullshit, and I don't need to invest any time into screening this stock. But in case of gambling.com, it is how it is because of this crazy shifts and acquisitions again, and seasonality and all of this. Yeah, it's really not a regular business like selling software, for instance. Yeah, so a little bit more non-cyclical in business. However, so it looks good, 4.4% year-on-year growth compared to past. Yeah, it's not bad at all, but it's decreasing. So I rate it negative. It's a very strict one. Neutral might be okay as well, but I rate it negative. And if it's developing well next quarter, I promise I will consider it and add a green color to it and a positive rating. Let's see what is going on with the adjusted net income. Wait, what is here going on? D20. Oh, that's not correct. Okay, so we going here. Okay, and now we're taking a look at the adjusted net income margin, and past quarter it grew year on year 26%. Nothing to complain about. Even now 15% year on year I think is not bad at all. And guys actually are using all these adjusted measures because it's considering kind of, as far as I know, sometimes the acquisitions, and makes it a little bit more balanced. Otherwise it's a complete mess from my perspective. However, it's growing, but you can see it's definitely lower than past quarter, and not sure what was going on with past quarter because it had 47% of the revenue. Wait, maybe I should. Okay. So 41% margin. It's still by far the highest in the past quarters, next to the last quarter with 47%. But again, it's dropping. That is something I don't like to see. Absolute number is very solid, but that it's lower I don't like to see, so I rate it negative. Okay, now we take a look on, we talked about this. I mentioned that a lot of acquisitions going on at this business, and of course they use liabilities, debt money, loans basically to finance this kind of stuff, and therefore we have here this liabilities and the current assets stated, and I created different kind of KPIs to make sure gambling.com is not running out of money. It's always nice to add new companies to the business and implement them very well, but you need to always make sure to have a certain level of liquidity, and you have financial power. And as soon as you're running out as a business of financial power and you don't get new financial money, then you are done. You are basically done. And so therefore I'm checking this, and we have the short-term debt ratio. So what we check here is how much of the current liabilities is covered by the current assets, and here we want to see something like 100% at least. That is what I like to see, because that means that really you can see it here, the current assets covering all current liabilities. That's in perfect shape, and even everything would broke up, they are capable to pay it back. And with 100%, it is solid. It's not extremely well. It was better in the past, but it's okay. However, I rate it neutral, because more than 100% is more than 100%. That's okay for me at the end. So, and then we have the short and long-term debt ratio, which means current assets cover current liabilities and non-current liabilities. And you can see here the big jump from 26 million US dollars to 116 million US dollars, so roughly 90 million, 90 million more. What is it? Very likely OddsJam. That's the price of OddsJam, which is integrated into this, and therefore, of course, the short-term, long-term debt ratio really gets a strong hit. It's very, very low. Again, it's not like surprising. It's calculated by the management. They go for this risk, but they see the chance, and they trust them, because otherwise I would not be invested. So far I trust the management, because again they are very, very experienced. They founder-led and all of this, and a lot of the executive board, of the directors board, they are experienced in this business and very focused on it. So I assume they know what they are doing, and I assume they knew that it was worth to invest this money in OddsJam, and it was one of a lifetime experience, let's say it like this, to invest that much money at the current status. It's definitely risky. Good thing is, and they stated it in the current report as well, the management told that they reiterate the full year outlook, because at the end they are not heavily affected by tariffs and this kind of stuff, and that is a big plus of the business of gambling.com. And always people will gamble, even if they're running out of money they will gamble, even if they have a lot of money they will gamble, and sports betting, that is something what is in the human nature, I think. Like some people like to drink or smoke even though they couldn't afford it. Gambling and betting is part, I think, of this DNA, of this identity. And so I think it's okay to go for the risk, but I hope they will not really over lever in this regard and really crush limits which you shouldn't crush. However, this is for me negative, because I want to see here something like 50% would be fine for me, and 29% covered by the current assets, not that nice. As long cash flow is existing, as long they have their net common margin, as long as they have their adjusted EBITDA, as long as OddsJam, for instance, adding value to the profit side and really creating momentum, it's no issue to have some debt and cover it. But of course, it should be in balance, and of course, it should get some added value should take place by the acquisitions like OddsJam. And now we take a look at the last KPI, and that is basically stock-based compensation share. So basically, I see it as how a share holder orientated the management is, and how much money they pay their staff for stock-based compensation, for their work. And I mean, here is not that much surprise. In the end, you can see past quarter it grew by 0.4%, this quarter by 0.6%, so it's more or less stable, but of course we're talking about a relatively low number, and 3% is already, you can see here, compared to the other quarters, more or less an all-time high, and it's a very low level. I mean, you need to know that both co-founders, I think they are shareholders of this company with something like 45%. And if the stock-based compensation would be very high, they basically would dilute as well their own shares, which are a lot of shares in this case, which I love that this is the case, because they really have skin into the game, and they have another motivation to take care of what they are doing. And again, it's their baby, it's their legacy business. They want to make it grow. And it's, I think, founded in 2006, so almost 19 years old, if I'm not mistaken. And co-founders are still on board and doing this. So I don't think they want to really mess the business completely with OddsJam. So again, one more aspect for me to trust in them. And 3% stock-based compensation is very, very solid. I put it neutral, but other businesses out there, I mean, maybe they are not that profitable, but other businesses with same growth, profit growth and revenue growth numbers should definitely orientate on this kind of performance by gambling.com. I like this very, very much. But when we overall take the KPIs, I mean, good thing is that really the core KPIs, at least for me, part of it, with performance marketing, subscription advertising offer looks amazing, and as well, if I'm not mistaken, the NDCs, new depositing customers, looks as well very compelling, very attractive, and that is nice to see. And I mean that the costs are spinning around a bit crazy because of all of these acquisitions. It just comes in hand. I rate it here. What I do here is just rating the results. I'm not rating if I would purchase further shares of this company or not. It might be the case that after this call, very likely not, because I already purchased for $5,000 additional shares yesterday of this company, and I have other companies as well I take care. And honestly, gambling.com is not my 100% favorite company I'm a shareholder of. It's on place number 5 out of 5 stocks I'm currently invested in. So, but however, if I would not invest yesterday, for me the results looking okay for sure, and maybe I would think about to invest more money today, because I'm convinced by the valuation of the company, especially in terms of the performance. But I need to be strict with my rating, and therefore there is a lot of red here. I explained it in the past minutes. However, nothing I'm concerned about, everything makes sense. But this one here is for sure a neutral rating. You can see it already in the first glance, it's heading to a neutral one. And so we have here a neutral one, we have here a neutral one, and now we check out what is going on with the outlook, with the guidance by the management. And what they've originally stated are those numbers at the end of past business year. and now they reiterated it. I already mentioned it. So nothing has changed in terms of the full year guidance. So that's neutral as well. So not a big surprise. However, so that makes it really, really simple. Neutral rating, and sounds boring, but it's definitely not boring. You can see this kind of shifts in the countries. You can see the shifts of the different services they provide, yeah, in the different sectors. So for sure, not what is going on here is boring, but I granted a neutral rating and neutral verdict, which means in my world, I'm very satisfied as an investor, and I want to stick to it. Yeah, and if it would surprise me very heavily, for instance, I would rate it green. It would be really like some really on top performance, like more than expected, more than assumed by me basically and by the market. That would cause a positive rating, and negative is really like not covering even my expectations. And my expectations again are not low. I want to invest into the best companies, for me at least, for my purpose of investing, and gambling.com, I count it as one of those. And if they achieve a neutral rating, that means for me they are heading to the right direction. They are one of the best companies and they can stay in my portfolio. So that's actually something very positive. Yeah. Okay, guys, and now let's show what is going on with the market price. I mean, so far, market price markets are not open yet, but soon, in a few minutes, and you can see here already the pre-market price is 3.2% up. So I think that is, I would actually even, because of the huge profit beat, I would expect even a higher rise, like something like 5% would not surprise me, 5 or 6%. But on the other hand, it was not a double beat. It was a double beat, but not a very strong double beat in terms of revenue. And not everything sounds perfect. There are definitely some attributes and aspects of the earnings, as we have screened, which are not looking perfectly in shape and which leave some question marks. And therefore, I understand it's just 3%. Let's see how it runs out during the day. And maybe we'll check one more time what are the reactions of the market. I mean, we have here the post and the double beat basically, and that's nice to see. And you can see here first reactions, fantastic, and they never miss, great management. So that looks good. I share this opinion. So I'm as well very glad that at the end of last year I somehow found this company, and I'm not regretting it at all, and staying in hopefully for a long time. And let's see how it develops during the day. I mean, the futures at the moment, Nasdaq futures and S&P futures are negative. Maybe it would reach higher levels if the overall market would not develop negatively. But yes, so still, if it really comes out with a positive price development today, I think that shows really strong power, because it's basically working against the market, and the market is growing into a negative direction right now. Yeah, guys, I mean, that's it for today. And before we end, just a quick outlook to the last results of the earnings season for me. You can see here the shares I'm holding, the stocks I'm holding. Actually, not anymore a shareholder of Alphen. I've sold this on Monday because of the different reasons, but let's say make it simple, because of the bad earnings results of Q1. So the other 5 I'm still invested, and the only one which was not covered right now is the Sentinel-1 earnings call. You can see it here at the end of May, 13th of May. Very excited for this one as well. Yesterday purchased $5,000 of the shares and added it to the already existing whatever $14,000 roughly. It's not $5,000. I added. Let's keep it as $5,000. However, guys, I mean, that is the last one. We can see each other, last call for the season, and then you can relax and I can relax a bit more. and see what will happen till the next fight is going on, the next war of the markets, the next earnings release numbers which getting shared with the public investors like me. So guys, if you enjoyed what you have seen today, feel free to like the stream, to subscribe to my YouTube channel. Always appreciate this, to miss not any news as well. I'm quite active in the community section at YouTube and sharing there when I purchased shares, I sold shares or something, or I update here about my portfolio overall. And of course you can follow me as well on Instagram. My name is A Sense of Capital, and there as well I'm sharing all those updates. Yeah, so would highly appreciate if you follow me there. Always keeps it more interesting and keeps me motivated to stick to all of this what I'm doing here. And guys, I mean, that's it really for today. Thank you so much for joining. Appreciate it. That hopefully you appreciated what you have experienced right now. I'm under 1 hour. That's always good. That's a big target for me because I always talk too much, and I think that's the reason why sometimes after the live earnings session people not joining anymore, because if you see there's a video stream, a recorded stream of 1.5 hours, which is not up to date anymore, already a few minutes later basically. This is how live streaming works. I would very likely, even by myself, would not watch it, at least not completely. So glad that we didn't hit the mark. Guys, as always, a quick disclaimer, like at the beginning, that was no financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided. A sense of capital.